What if you were to invest your hard-earned money, or perhaps the windfall from the recent contest you triumphed in, into a high-yield savings account? If that thought elicits a nod of approval from you, then you're indeed on the right track. High-yield savings accounts, as one might discern, offer much larger interest rates compared to standard savings accounts, leading to the rapid growth of your financial capital. Today, we're embarking on an exhaustive, comprehensive analysis of the dynamic and multifaceted world of high-yield savings accounts. We'll probe into an array of advantages they extend, offer guidance on selecting the one that best suits your circumstances, and delve into the labyrinth of their complexities. High-yield savings accounts aren't your typical deposit accounts. They stand apart as a distinct category that attracts considerably higher interest compared to traditional savings accounts. Most often, you'll come across these types of accounts at online banks. These digital banking institutions, unhindered by the operating costs of conventional brick-and-mortar banks, can afford to provide higher interest rates. We'll dive deeper into the structure of these online banks, comprehend why they are able to offer such impressive rates, and explore the rigorous security measures they employ to safeguard your investments. The discussion will further extend to their customer service strategies, their spectrum of digital tools and features, and the crucial role of FDIC insurance for these accounts. The primary allure of a high-yield savings account is its potential to yield larger returns. But that's merely the tip of the iceberg. There are other critical aspects to consider, such as the ease of accessing your funds, minimal initial deposit, stringent fund transfers, and more. Furthermore, these accounts equip you with a weapon to combat inflation, ensuring the buying power of your hard-earned money stays intact. We'll dig deeper into how inflation interacts with your high-yield savings account, the different approaches you can adopt to mitigate the negative effects of inflation on your savings, and the crucial role played by the Federal Reserve in determining interest rates. While the advantages are evident, potential pitfalls such as service charges, restrictions on withdrawals, possible internet issues, and a requisite proficiency technology can't be overlooked. We will delve into these potential drawbacks, scrutinize their implications, offer strategies to maneuver through these potential roadblocks, and suggest methods for managing these accounts effectively. Before plunging into this venture, it's vital to comprehend the nuances, identifying both the rewards and the potential challenges of high-yield savings accounts. We'll delve into the origin of these accounts, the role of financial regulators in safeguarding their security, and discuss tactics to maximize the benefits. We will also decode the mechanisms behind the interest rates offered, contrast high-yield savings accounts with other financial instruments such as certificates of deposit and money market accounts, clarify the impact of the prevailing climate on these accounts, and discuss the strategies to integrate these accounts into your holistic financial planning. So, come along on this enlightening, comprehensive, and detailed journey as we dissect this topic in extraordinary depth, guaranteeing you a thorough understanding and enabling you to make a well-informed decision about investing in high-yield savings accounts. Choosing to invest in a high-yield savings account can provide a multitude of benefits. For starters, this type of account offers a safe haven for your hard-earned money. This safety is ensured by the backing of the Federal Deposit Insurance Corporation, FDIC, a government agency designed to maintain stability and public confidence in the nation's financial system. This essentially means that even in the unlikely event of a bank's failure, your money, up to a limit of $250,000, remains shielded from the storm. Additionally, high-yield savings accounts provide a degree of liquidity that is unmatched by many other investment avenues. This feature allows you the flexibility to withdraw your money whenever you deem necessary, ensuring that your funds are always within your reach. Lastly, high-yield savings accounts serve as an efficient tool for pursuing short-term financial objectives. Whether you're planning on making a down payment on your dream house, or you're building an emergency fund for unforeseen circumstances, these accounts can be a real game changer. They are an excellent tool for saving for short-term financial goals, such as a down payment on a house or an emergency fund. Deciding on the ideal high-yield savings account demands meticulous thought. This process can be daunting, but having the right information at your disposal helps a lot. The first factor to discuss here is the interest rate. It's the most critical aspect to consider when evaluating high-yield savings accounts. You want to make sure that you choose an account that offers a competitive, if not the best, interest rate. However, keep in mind, interest rates can fluctuate over time, so it's crucial to stay updated with the latest changes. The second significant factor is the fees associated with the account. Some institutions may charge a monthly maintenance fee, withdrawal charges, or even necessitate a minimum balance to avoid these fees. It's crucial to scrutinize the fine print to fully comprehend the potential costs associated with maintaining the account. You don't want any unexpected fees to eat into your savings. Access to funds is another aspect to consider. You might need to evaluate how straightforward it is to withdraw or transfer money from the account. Some banks might limit the number of free withdrawals you can make each month, which can prove to be a hindrance if you frequently need to access your funds. Next, consider level of customer service the bank provides. Always verify if the bank offers reliable customer service. This becomes exceedingly important if you opt for an online bank, as physical branches might not be accessible. Lastly, don't overlook the online and mobile banking features offered by the bank. These can considerably ease the process of managing your account, providing you with instant access to your account information whenever needed. These features can make managing your account more convenient. To maximize your returns from a high-yield savings account, let's dive into some essential tips. Firstly, regularly contributing to your account is a critical point. It doesn't matter if the contribution is big or small, the significant part is that it's consistent. Even if you're only able to put aside a modest amount each month, this can accumulate over time. Thanks to the magic of compound interest, your savings will expand faster than you think. Secondly, it's crucial to keep a close watch on interest rates in the market. If you notice that rates are on the rise, it might be worth considering a transition to another account that provides a higher CAF. Remember, even a small increase in the interest rate can make a substantial difference in the long run. Thirdly, be wary of unnecessary withdrawals. High-yield savings accounts usually have a limit to the number of free withdrawals you can make monthly. Exceeding this limit can lead to unwanted fees, which could eat into your earnings quickly. Lastly, pay keen attention to track any fees. Keeping close tabs on these helps ensure that they don't sneak up on you and gradually eat away at your savings. Avoid any unnecessary fees that could diminish your returns. Investing your savings in a high-yield savings account offers safety, liquidity, and better returns than a regular account. It's a financial strategy that can boost your wealth accumulation, but it's not without its considerations. You should look into the account's credibility, accessibility, and any potential fees. The interest rate is another key factor. A higher rate increases your savings growth speed. It's also important to examine the account's compounding frequency, as that can significantly affect your earnings. So, let's start this exciting journey of growing your savings and maximizing your returns.